Hello, this is ICR Tiger from thetradingtigers.com. Today's the 28th of May 2014. We're going to be looking at the majors and specifically looking at, and only looking at the Aussie CAD. We're going to take it from the monthly and bring it all the way down to the 1 hour chart using the Elliott Wave Analysis. Okay, fine. So before we start, please go through the disclaimer, stop, read at your own leisure, as well as the hypothetical performance. Okay, fine. So once again, let's go and look at some charts. Here we have is the Aussie dollar. As promised to you, I said I'm going to start from the monthly chart. We're taking it down here from the low of our count, which is April the 2nd, 2001. This is our 0.0, and we're moving it up to it's an ABC correction of a super cycle. That's blue in brackets. That's the larger wave degree. So the wave A completed its leg in August 2011. So that's a good 10 years of a move, which is an ABC correction. If you can see, there's the A of the subwave, there's the B and the C, right? And now we're in a B wave, which is the corrective move of a super cycle. Its subwaves are a cycle degree, which is black and small letters. So what we'll do, we'll go down to have a look at a better understanding on the weekly chart, if that can help you. The super cycle, as we said, was in a super cycles in a B wave, and that's an ABC correction of a cycle degree, which is the smaller degree size. And as you can see, there's the A, there's the B, and it's also currently now in a C wave. Can't see so clear here on this chart. A lot of information is on there. This is true. But please do pay attention to our black line, which is always giving us the heads up where we shall be. Let's knock it down to the daily chart. Daily chart, and you can see once again the cycle degree of the A, B, and we're in the C wave. Now the C wave has 5 waves within, and now we start rolling it down to the primary degree, which is the red in circles. So the 5 waves, wave 1 has completed on the low, the 4th of January 2014. The wave 2 retraced up to the 78.6 level of the Fibonacci, almost hitting our black line, which is a good enough point for us to be able to take it. And that was on the high of April the 9th, 2014. We're now in a wave 3 down. We're still waiting for serious moves to move forward for us, and now we have to start looking at subwaves of the primary degree, which is the intermediate, being in green in brackets, and that currently is in process. So if I knock it down to the 4 hour, I can give you the 4 hour. Apologize, it's come a little bit small. You can see here we are in an ABC move, and for the intermediate, and the intermediate now is in a C move, but when we scroll it down further, we come into the minor degree. Minor degree, we'll have to knock it down to the 1 hour chart. We can actually get a better perspective of that. So here we have the B move, and then we're in the C move of the intermediate, and they have a 5 wave pattern. So wave 1, we believe, is completed on the May the 21st at 5 o'clock. We're right down to the hourly chart now. Okay, we've previously taken some trades, and we took a trade earlier, as you can see, at 09325. A short position, just moved our stop up a bit to capture, to be a little bit more sure of what we're doing, at 09433, and that is currently about we're 107 pips in stop loss for us, and currently we're 85 pips in profit, which is a good thing. Price has come below our black line, hitting the kind of 3 pink lines, as you can see, dashed, and that's we're expecting our wave count to be correct. We're expecting the wave 2 to go back and cross the wave across the black line and its boundary lines, hit the 61.8 level, and then start to make a rapid decline down. So if one was going to take a trade, I'd be taking a trade at 0.9336, and I think we put some entry points there, 0.9336 with a stop at 0.94339. So let's just be sure that we've got a trade in there, and we can put a sell position. We put it for our account size can cover us at that particular point, and we put it for limit, at there, and we put a GTC, that means good to cancel, and that's where our entry is. And our first target's going to be, we're going to aim for the 100% level, and that's what we're going to aim for. Just stop. Our stop level is at the same stop level which we said. Now it's at 101 points. So virtually we've been taken back to close enough to where our original entry was. But anyhow, if the price doesn't come to that level, we're still in the trade accordingly. I'm not going to add on right now, and we put our limit down to the 100% level right here. So that's our target, and we can put our target stop here at the 100% level and put it for blue, and we can put target take profit. In fact, let's just make it very clear and just put exit. So that's where we're exiting the trade. So let me give it to you again. Entry at 93336, at stop at 0.94339, exit at 0.9134, and the profit level is gonna be 199. So that's almost a 2-to-1, which is pretty cool for us, right? If you want to, you could take another trade at the end of the 161.8. In fact, that's what we'll do. We'll put another one at 618. So therefore, we're going to capture more of a move accordingly. In fact, what we can do, we're expecting some retracement. Let's put it at the same level at the 61.8. In fact, we'll put it at the 50% level. We'll take that as the GTC. Right, and now we're going to put our stop level at the same location. Stop level 122 points, okay, and what we're going to come down here for now, we're going to come here for, it can come for a shorter place, but we want to go for the 618, and that's what we're going, that's 299 for 122, that's 1-to-4 risk reward ratio, which is still valid for us to take. So let's mark all this up, so you traders can be more aware, and we can put that as also as an exit, okay, and we put another one as a stop, an entry at the 50% level, and we can put that entry as 3. Okay, so we're entering at 093115 and stop at 09433, and the exit is 0.9012. So that's the trade setup I'm going to give to you for today on the Aussie CAD on the 1 hour chart. So that's all from me. I'm ICR Tiger from thetradingtigers.com. Thank you. Hello, this is ICR Tiger from thetradingtigers.com. Today's the 28th of May 2014. We're going to be looking at the CFDs, gold, SPX500, US30, German 30, and the US oil. We're taking it from the daily chart. And once again, we're looking at it with the Elliott Wave Analysis. Once again, traders, before we start, go through the disclaimer, stop and read at your own leisure, as well as the hypothetical performance. Okay, fine. So now let's look at some charts. Right. So here we have the gold chart on the daily time frame. As you can see, we've been following this, and we're currently now in a primary wave 3. Primary wave being the larger degree shown right now, and the wave 1 completed down on the 31st of December 2013, and the wave 2 completed at the high at the 78.6 level on the 17th of March 2014. And as you can see right now, we're looking at its wave 3 come down. We put a entry at 1267.84, which is the low of wave 1 of the subwave of the intermediate. So running through with you, the subwave of the primary is the intermediate, which is green in brackets, and that's also in a wave 3. It's completed its wave 1 and a wave 2. The wave 2 hit the 50% level and came close to our blue resistance line, and the subwaves of that is the minor, which are in pink. And this is the degree level what we're trading right now. We're actually trading that degree, which is the minor. And as you can see, if I expand it a little bit more, we took the entry at 1267. We're going to hit our first target, which is the 100% level, at 1252.82. This is a very short and cheeky trade that we're doing, basically just to capture some profits in and keep the system running. And we're only going for a couple of trades right here, just to sort of keep you getting a little bit of profit within. And that's that. Okay, fine. So if we move now to the SPX500, the SPX500, as you can see, currently we're in a trade which has closed up right now. We've hit 3 profit targets already, and this trade has been successful for us. And currently now, if I zoom out, you can see exactly where we're in. We're in a wave 5. In fact, what I will do, traders, I'll go to the monthly chart, then you can actually have a better look exactly where we stand on this particular instrument. You can see we take the wave 0 way back in February 09, and that's a significant time ago. This is for the SPX500 following the S&P 500. Once again, to reiterate, this is a CFD instrument that we're doing, and the super cycle being the largest, and it's completed its wave 1 back in July 2000 and come down, hit the wave 2 super cycle being blue Roman numbers in brackets. And as you can see, wave 2 completed at past the at the 61.8 level. Please notice our black line in the sand has also been hit and penetrated, validating our wave 2 position. And currently we're in the wave 3 of the super cycle. Breaking that down further, we're also in a wave 3 of the cycle, which is the lower degree of the super cycle. This cycle is black in Roman numbers, and as you can see there, it's wave 1 completed on the high of May 2011, and wave 2 completed hitting the 50% Fibonacci on October 2011 low. And please notice that blue line once again. It's our line in the sand where support and resistance, which helps us determine our necessary trades. That's the monthly chart. Let me scroll down to the daily, back to the daily now, so you can get a better understanding. Should I get back to the weekly? I'll go back to the weekly. So basically, as I mentioned to you, we're in the wave 3 of a cycle degree. The cycle degree now, subwaves are 1, 2, 3, 4, and a 5th wave of the primary being red in circles. We could be in a wave 5. There's a strong possibility we could still be in a wave 3, but we'll make the analysis thereafter and go through things as we monitor things. So it's probably a wave 3 or a wave 5. Both we will have to verify accordingly. And then the subwaves of the primary, is the intermediate being in green in brackets, as you can see. So wave 1, wave 2, and wave 3 is still in progress. Its subwaves are the minor wave, which is pink, and as you can see, we put our levels here of potentials where it could be. The wave 3 could possibly end, and the subwaves, the ones that we've just traded, is in blue and in circle. As you can see, we put our entry at 1891.6, and we had our stop level at 1843.8. We took profits very cheekily at the 61.8 level, which is 1895, and that brought us to a very small but very nice little, bring some chips in is the word, is about 4 or 5 pips. Yeah, very, very small pips, 4 or 5 pips. And then the second trade took us to about 12 pips. And the last one, which we've just taken, is 22 pips. This is just to keep us getting some profits in accordingly. Now you can actually see the wave 3 of the minor degree has hit at the 100% level, right? We can see a doji formation on that. Does it mean that the wave 4 could come down? This is probably what we need to start looking in a wave 4, move down, so we can take out the next wave, which is the wave 5. The wave 5 of the minute, meaning blue in circles and in Roman numbers. That's what we're looking for, the wave to come down, and then we'll take it up to take it for the wave 5, complete that wave 3. And our main objection at the end of the day is to start hitting our necessary target levels, right? Excuse me for 1 second. Hit our necessary target levels accordingly. And as you can see right here, we have our projections set in place for the intermediate wave, what we are aiming overall for. As you can see, that's still quite long, but yeah, we can put it down there and can take it through accordingly. So we're going to be monitoring that and also taking our trades on the dips, buying on the dips and going long positions. Okay, fine. So that was successful trades that we had put through accordingly. Next trade is the US oil. As you can see, once again, let me take it to the monthly and then bring it down to you for the daily, so you can have a better understanding where we stand. Wave 0.0 started way back in December 1998. That's where we've taken our accounting from, and it's in the super cycle where the wave 1 completed on the high of July 2008. Wave 2 came down, hit the 78.6 level. Notice our balloon line has also been penetrated, but price stopped and held that price there from going any further. And that came down on the low at the low of January 2008, right? When we start to expand, we can actually see we're in a super cycle being blue Roman numbers, right? And in brackets, we're in a wave 3. We haven't projected its wave 3 where it could come to, because we're looking at the further subwaves of trading them, right? So thereafter, we're in the cycle degree, which is black in Roman numbers. I'll have to take it down to the weekly traders so you can have a better understanding and a better look exactly where we are. Super cycle being black in Roman numbers, and the 1st of May 2011, the high is the wave 1. Wave 2 came down at the 50% level. We're assuming we're taking it at that particular level, And that's where we put the end of wave 2, the cycle degree to complete. Now its subwaves are the primary, which wave 1 completed at the high of 26th of February 2012. It came down, hit the close to the 100% level, very close, but hit our black line, which is important for me to actually point out to you traders. It came to the 100% level, and that was on the low of 24th of June 2012. Okay, so right now we're in a wave 3 of the primary, which is red in circles. Let's knock it down now to the daily chart. This is the chart that we're trading from. So we're knocking it back on the daily chart. We've told you we're in a wave 3 of a primary degree, primary cycle, and as you can see straight away here, you can actually see the wave 2 of the intermediate, which is the subordinate or the subwave of the primary. Wave 1 completed at the high. If I bring it down for you so you can try to see what I'm trying to show you, traders. Bear with me. There you go. There you can see the wave 2, which I showed to you on the weekly chart. There's the wave 2, which is 0.0, of course, of the intermediate. Wave 1 completed at the high here, as you can see, of 28th of August 2013. Price came down, hit the wave 2, hit the 61.8 level. Please notice our pink banner, the middle banner being hit, right? And price is going up to hit the wave 3, right? Now we're looking for the subwaves. The subwaves of the intermediate are the minor, which are pink, right? And pink alone, right? So wave 1 is here, the high of 3rd of March 2014. Wave 2 has come down, hit our black line, right? We know it's a 61.8 level. Pretty sure it's going to be a 61.8 level. Let's just verify that again for you traders. Yes, 61.8 level. That's correct. And now we're trading the wave 3 of the minor wave. The subwaves of that is the ones that we've traded and got into. And that's the minute. That's been in blue, Roman numbers, and in circles. Wave 1 at the high of 15th of April 2014. Wave 2 came down. That's a 61.8 level verification of our subwave and our wave 2 count. We took the entry at 101.22, knowing this is a wave 2, waiting for the price to hit our necessary levels. Right, our necessary levels are the scale of the wave of the third wave of the minute degree, and we put our target levels at 105.1. And we've got 3 trades there, and we're going to subsequently take it 1, 2, 3, and we'll take the wave 4 when the wave 4 comes down, and then we'll hit it for the wave 5 to complete the wave 3 of the minor degree. So that's that. So let's now move to the US30. That's following the Dow Jones in the US index. Once again, this is the CFD traders, and just want to reiterate that to you. So what we're looking at now, I've taken it to the monthly chart so you can have a better understanding, better look. The wave count starts at 0.0 way back in November 1987, that low. That's where I've taken it from, taking the wave 1 at the high of February 2000. February 2000, we take then our retracement down to wave 2. Wave 2 hit our Fibonacci at the 61.8 level. Please notice our black line once again has been hit, right? So then we now know we're in a wave 3 of the super cycle being blue and in brackets, right? Subwaves of the super cycle are the cycle degree, which are black and in Roman numbers, and you can see there's 1, there's 2, and we're in a wave 3 right now. The subwaves of that are the primary being in red and in circles, and as you can see, wave 1 completed, wave 2 at this low, hitting the various levels. I think that hit a 50% level. Wave 3 completed at the high of 12th of January 2014, and wave 4, and so we're in a wave 5 of a primary degree. So we'll scroll it down so we can see a little bit better. Wave 4, yeah, completed of the primary degree at the low of 5th of February 2014. And now we're in a wave 5. Looking it back, knocking it down a little bit, a few more degrees, we can see this subordinate degrees are the intermediate being green in brackets, wave 1, wave 2, and also in a wave 3. Its subwaves are the minor waves, and these are the waves that what we are trading right now, traders. So as you can see, wave 1, wave 2 completing. We're trading that wave 3. We're going to hit our target at 61.8 level. Going to take it at 17305, and that's what we're looking for right now. We're currently in our trade long, which we took the entry at 16600 with a stop level of 15978. And that's what we're looking for. We're going to be able to hit our targets. Let's just hope that our levels can be brought to justice. Okay, fine. Now, so that is that. And if I can try to move along. Right, we're now on the German 30. I've taken you to the German 30 and where we stand with that. As you can see, we're in a degree cycle. There's the wave 3 completing the high up here, and wave 4 completed the low down on March 2014. We're in a long position, entry at 9701, and we've taken one trade. We've hit our target level. We've got a second trade, traders, at taking at 10287, and our stop loss is down at 8984. We'll be looking to move this this up into open territory and take it at even at the break-even level. And so we're in a risk-free trade. That's what we're looking for now. Probably going to take this stop level all the way up. Take it up all the way to, I think that a good level to take our trade, manage our trade right now, traders. Just looking for the best location where to put it. And I think the best level to put it will be, let me put it down. Bear with me, I'm getting a little bit of a technical glitch right now with my mouse. Apologize for this, my computer's a little bit slow. I'm telling you, traders, right now that I'm going to be moving my stop loss right now below the 9524. We're not in the trade for free then, but still we've got limiting our exposure. That's a very valid thing to perhaps do, or we can just leave it right now and let it hit our final profit target at 10278. Okay, so traders, this is it. I'm ICR Tiger from thetradingtigers.com. Thank you. Bye-bye.